We got to take a look at the U.S. major averages. Got them here for you on screen. Right now, we're down across the board. Traders, they're awaiting the September jobs report. That is coming tomorrow, Friday. While tensions in the Middle East dampen investor sentiment. To discuss what risks might be ahead for the markets, we've got Brian Vendig, MJP Wealth Advisors, Chief Investment Officer. Brian, great to have you here on the program with us. All right, so we've laid out a lot of what's at play within this market right now and the environment as we kick off the fourth quarter of the year. How should investors really be evaluating this range of issues, from geopolitical tensions to port strikes, to the policy pathway that the Fed is going to be continuing, we expect, once we get into November and beyond? What is carrying the most weight?
Yeah, thanks, Brad. I mean, look, the month of October always historically has been one of those more volatile months, and especially with all those variables that are out there. I think going into earnings, it wouldn't be surprising that the volatility levels, which have spiked over the last couple of weeks, continue on until after the election and through the beginning of the year, just due to some of the uncertainty coming out of Washington to see what sort of policies they're going to deal with in the future. But I think at the end of the day, just to keep it simple, Brad, it comes back to earnings. And so earnings outlooks for the balance of the year are still robust. Earnings contributions coming from areas expected outside of tech is what we see in the numbers. And we're also seeing decent earnings, even though expectations have come down a little bit for next year, still growth going on. And behind the scenes, we still have an economy that's chugging along. Granted, slower growth, but growth is good. And stabilization, you're right, labor markets have a big report tomorrow. But again, stability there as well based on some recent indicators. So I think investors need to look past some of the short-term emotional responses to some of these variables and come back to the fundamentals longer term.
You know, it's interesting, and I'm looking at some data from FactSet here while we have you, Brian. For Q3 2024, the estimated year-over-year earnings growth rate for the S&P 500, 4.6%. If 4.6% is the actual growth rate for the quarter, it would mark the fifth straight quarter here of year-over-year earnings growth for the index. What are the anticipations, though, for the broadening of earnings growth as you've been tracking?
Yeah, I think that's a great point. We know we have the Fed obviously cutting rates full 1% this year, outlook for rate cuts next year, another 1%. And with the earnings growth that you mentioned, Brad, we think that's going to help the cyclical parts of the economy. I'm talking about industrials, I'm talking about financials, I'm talking about infrastructure, healthcare, and even some of the smaller companies out there in the small cap space and medium space. So I think it's what we're looking for is more of a balance, because we know the story. Disparity of returns have continued consistently through the first half of this year, all of last year, with our friends in mega cap tech, with the AI innovation trend continuing to play out for many years. That's still going to be there. But it's nice to see that there's contributions coming from other areas of the market, the other 495 or 93 stocks, depending on how you measure it, outside of those big mega cap names. And I think that's what's really necessary to support these valuations where we are right now. Because when you strip out mega cap tech, the S&P 500 on a forward PE perspective is pretty close to historical averages.
And so with that in mind, as I was mentioning at the top of our discussion here, we are in the last quarter of the year. How should investors be looking at their retirement investments and overall asset allocations, knowing that we have so many significant events that are all coming to this intersection at once, seemingly, in this final quarter?
Definitely. Well, I think it comes back to this whole concept of, when you think about financial planning and life cycle planning moving forward, it's controlling the things that you can control that lead to better outcomes that everyone can collectively celebrate. And one thing that we know is taxes is something that is a topic, Brad, that most people don't want to pay, right? We know that. And to have some tax avoidance in your financial plan and your investing plan is really key, and something that we talk about with our investors. So here we are in the fourth quarter. Take a look at how much you've contributed to your retirement account through work or on the personal side that might lead to a tax deduction that might help in managing the costs of living through taxation. Also think about municipal bonds. The Fed has still given us a gift, even though interest rates have come down. The municipal bond market is less volatile than stocks. We can still get some really attractive yields there, and you don't pay federal tax when you invest in municipal bonds and in a taxable account, having that income come into the account to be reinvested or help to support living expenses is a really nice a benefit. And I would say lock in those rates now before we go through another 1.5% of rate cuts over the next 15 months. And I think at the end of the day, have a plan is what I'm saying real simply as we reflect coming into the end of the year and you think about next year. Put some of those short-term versus long-term goals out there and try to prioritize accordingly, because I think at the end of the day, we're all so busy and we always react to things. But if you can have a plan and have a little forethought, I think it helps to improve your probability of success.
Brian, thanks so much for taking the time here. I mean, you've got Yahoo Finance baseball Slack lighting up right now, trying to figure out what ballpark that is behind you. Our best guesses were in Minnesota at Target Field, so you can confirm or deny whether that's true here. But ultimately, whoever you're a fan of.
Citi Field. We're rooting for those Mets.
Citi Field. Wow. All right. That's going to appease some people in the control room. Brian, we knew you wouldn't let us down. Brian Vendig, MJP Wealth Advisors, Chief Investment Officer. Thanks so much, Brian.
Thank you.